Next, we're going to go into what the homeowners' responsibilities are and what they're looking at right now. And it's a date, August 31st, which is in the next couple of days. And you were going to, the forbearance is over, especially here in the state of California. I cannot speak for other states, but here in the state of California, you're going to have to start looking into your options as well. And what these options are is reaching out to the servicer, whoever is collecting your payment, your options for forbearance, find out what happens. Because many of you took 2 forbearances. You get 2 forbearances. And I don't know if you really understand the totality of what the forbearance means, but they give you an extended period of time that you don't have to pay in hopes that you can save up enough money and try to catch up. And then they're going to work with you to try to get the money you're behind put on the back of your loan. Now, some people will be able to make that happen, some won't. The next option is going to be to get a refinance and get some of that money cleared up. We do have a state program for if you live in the county of Los Angeles. They are giving up to a $20,000 grant for people who got behind in COVID. Give me a call at that number or email me down below on that sheet, 310-704-7140. So you can apply for that money. There is a lot of help out here for you if you reach out and contact people. So don't feel, put off by at least getting the information, whether you qualify or not. They have the median income in the state that is required for you to be able to take advantage of these programs. So there's a $20,000 grant that you can apply for if you're in that forbearance situation and now you're owing, say, $40,000. At least this $20,000 will make it come down some to assist you. There's also a conversation on getting your lender to rewrite your loan at a lower amount. You've been with them 20 years. This pandemic hit. Have the conversation about rewriting the loan for a longer period of time and then getting you into a program where you're making also a lesser payment. So there are terms and your loan can be changed. Then we have the loan modification. Loan modification means pretty much similar to rewriting, but it's done through another institution. You can go to another company and have this done. It's willing to take your loan on. Also, the payment plan. The payment plan just helps you to reestablish yourself, and it gives you a longer payment period in history. If all else fails, we start looking at maybe if it's going to get serious, they're going to try to evict you, you can get maybe a hard money loan. Please be sure and contact me if you're going to need to get hard money. Not all hard money people are your friend, and you therefore need to be referred to someone. Just going to someone in the blind, finding them on Google, I wouldn't suggest that. Be sure and be referred, that you are someone that's being sent to them, that they know you. These people are reputable. There's a lot of scam artists out here right now, and you don't want to get taken for the ride of a lifetime. I would highly suggest talking to someone before you make that move. Also, and I really don't like suggesting this, if you have to go into your 401k, it's almost like being your own bank. You've been saving that money for years. What's another good investment but to go and pull out $50,000? You got $300 or $400 in there that you're saving for your retirement. Pull out 50, get some of these back payments caught up from the 401k. It's an option. I would look at maybe some of those other steps more closely first before I touch my retirement. But if it's absolutely necessary, go ahead and do it. My company offers, and I'm with Berkshire Hathaway Home Services, all the things I just discussed with you. What is foreclosure and what are your alternatives? This is a very serious, serious topic. What happens if I don't pay my mortgage? What can happen? You can go into what we call foreclosure, which means that your lender can legally repossess, meaning take over your home. When this happens, you must move out of your house if your property is worth less than the total amount you owe on your mortgage loan. A deficiency judgment could be pursued. So this means that you could end up with a bill even though you had to leave your house because you didn't have the money to make the payments. But all of the options that I just mentioned to you are steps that you can go through prior to even getting in this position. How long do I have until the lender forecloses? From the moment you got behind the first month, if you haven't made any additional payments or a repayment plan with them, and you've received a notice of default, it will be recorded about the first day of the third month after you stop paying your mortgage. So after the third month of no payment, your lender can legally file an unlawful notice of default on you, and it goes into the county records, and you'll start getting calls and letters from all sorts of people seeing if they can come out to help you and help you to borrow some money or sign the property over to them. Be sure you are dealing with a reputable company and person at this point. Do not let the first person that comes and stands on your doorway with their scam conversation or whatever. Be sure and check into this. Be sure and let someone know that you trust, that you've seen, know about, at least go over what they're proposing. In fact, I would get at least 3 to 4 proposals and sit down and look at all of them and see what the highlights are, what are the pitfalls and downfalls. This is very important information and should be taken seriously, as well as review these with an attorney or your accountant or your tax man. Let them know that you've reached a point where you look feeling that you're about to lose your property and these 4 people have approached you and you want to know which way is the best way to go and what are the best options. What are your alternatives? If your house has equity through our company, and I'm talking about my personal company, Berkshire Hathaway, we have a division where we help people that get into foreclosure to obtain a loan up to $50,000 to pay off debt and become current on their own. So my company will and can bring you current on your house payments while your house is being sold or you're getting a refinance to stop them from evicting you. We will refinance your property to a lower interest rate or payment. We will also obtain a line of credit to pay off your higher interest credit cards, thus saving you money to become current in your mortgage. So in other words, a lot of people are behind because they've got a car payment, they've got all these credit cards, and they're making major payments to these credit card companies every month, and they can't make the house payment. So we can step in and get that money for you so that you can move forward with this process. What about if my house doesn't have equity? Can you help me to negotiate? This is another typical question that we're asked. Refinancing through home affordability programs allows you the opportunity to refinance your property if you're not behind on your payments, to lower your payment again so that you won't get into trouble. A lot of people realize that certain things can happen during the course of their loan, and they might find that that bill or that payment is a little more than they can really afford. What would you call it? What's the term I'm looking for? Proactive. When you know that your finances are shrinking, maybe your husband, amount of money that they make or whoever you're buying this property with is not the same, and you can see down the road money is going to be getting tight, go to the lender then and start talking about can you rewrite this loan for lower terms? That our money is not the same as when we purchased the property. We don't want to have a problem. And can we start looking at reducing it? They are very much open to working with you. They already have established a working relationship. You've been a good client. Don't wait till you get into trouble. Be proactive is key here. What is a loan modification? Berkshire Hathaway can negotiate to reduce your payments by lowering your current interest rate or extending the amount of years in your mortgage. A lot of people don't realize, you wrote this contract 30 years, it could be extended for 40. A lot of people are doing 40-year loans. It makes the payment a lot less. You don't plan on leaving anytime soon. So why not extend some of the years? Same concept as putting all this money you're behind from this pandemic onto the back of the loan is an option, but you can also extend your payments out. So there's a couple of different ways to move on this particular problem. It's either by lowering the interest rate, which some companies will do, or extending the number of years is the key here. The way you can have extra money in your hand per month to pay off other debt, or at least not to get behind on your mortgage. This option could be permanent and your payments could be lower for the remainder of your loan. The downside is that the lender may require you to pay the amount you are behind and you will be on a 6-month probation. If you get behind during this probation period, the agreement is null. Another choice that homeowners have when they're being evicted or it's looking like it's coming to an eviction would be to do a short sale. With this option, you avoid foreclosure by the trustee sale. So when the lender forecloses on you and the sale date is put out, it's called a trustee sale. We can help you to sell your home and negotiate the lender for short sale. Even though you still have to leave the house, at least you could remain longer in the property and save money to rent another place as you get into the foreclosure. The plus side of this is that we will make sure that the lender does not pursue a deficiency judgment, meaning you don't have to pay the money the lender lost in the short sale. When you do a short sale, there's an amount of money that is going to come up missing that won't get paid. And a lot of people could file a deficiency judgment against you, which you would have to carry into your taxes for that year. So let's say it would almost look like you earned or gained money, like a capital gains, that you're going to have to pay taxes on. Nobody really wants to do that, and you lost your house. So this is just a good way of getting with a real estate company that knows what they're doing, that has experience in this, finding you a person to buy the property. And so there's not a lot of gap in there and a lot of money that the lender is losing. And they're willing, because you're getting out of the property quickly, that they're going to forego that loss, and they'll assume the loss, and they won't tack it on to you and your taxes, because it will be a 1099 that will be sent, or a 1099-R that will be sent to you that you will have to pay. And that's what we're trying to avoid. Talking with a good realtor that knows all these different options. You see the sheet there on the slide. We will come out, go over this with you explicitly, find out what the amount of money is that you're behind, which one of these methods works best for you. If this is something new that just happened, taking one of these options is pretty much where you're going to land. Next is the forbearance. We can negotiate a temporary reduction of your mortgage payments. This reduction could last from 6 months to 2 years. 2 years usually is enough time, even if the person is ill or they're divorcing or whatever the situation might be, or this pandemic, for people to kind of start getting back on their feet and get some semblance of, time back. The reduction could last from 6 months to 2 years. During the time, you could pay higher interest credit cards, automobile loans, or any other debt that you may have. and then have enough money per month to start paying back your mortgage on time. The downside to this is that after the expiration of the reduction, you may have a balloon payment. The balloon payment or your monthly payments may be higher to compensate for the months you paid short. So remember, when you come out of the forbearance, like I mentioned, we have that $20,000 grant by the County of Los Angeles that you may qualify for under certain circumstances. So that balloon payment could catch that up for you. Definitely want to tap into that. Deed in lieu of foreclosure. There is a deed that you can get if you want to get out of this totally and try to come out with as much less legal damage to yourself as possible. And it's called deed in lieu of foreclosure. On a last resort, Berkshire Hathaway can negotiate for you to return the property back to the lender. It's called a deed in lieu of foreclosure. In a voluntary manner, if you abandon your home, it could be considered abandonment. So you don't want to do an abandonment, just get up and walk out. And you may be liable for any damages the property sustains if it's vandalized. So once people know you're gone, they go in and tear out all the sinks, the toilets, they break the windows all up, which causes additional damage. Therefore, that's going to cost you money. So walking away is not the way to handle this. It's by having a conversation. There's too many steps in the middle that you could employ to keep yourself from getting in this position. These are the requirements. You are behind in your payments and you do not qualify for forbearance or a loan modification. Number 2, we are unable to sell your house because of notice of trustee sale, and you don't have a second mortgage. So people who have any of those concerns or considerations would qualify for this deed in lieu of foreclosure. I think we have given you a lot of options today. I think that you have to sit down, review some of these options if you're finding yourself in these issues, and then start reaching out to people that work with these issues so that they can lead you in yours, because everyone has a particular issue that they're dealing with, and you want to go to a counselor or a program and your loan servicer to find out which one best fits you. Give us a call, the Real Estate Network. I'm with Berkshire Hathaway Home Services. We'll be more than happy to counsel you and give you your options any day of the week. Thank you so much for listening, and we'll see you next time for Real Estate Next Word.